I watched someone lose their dream home last month, not because they couldn't afford it, not because someone outbid them. They lost it because their lender took 3 days to return a phone call. 3 days. And here's what really gets me. They chose that lender because that lender had the lowest rate. Save maybe $30 a month on their mortgage payment, cost them the entire house. Look, I get it. When you're buying your first home, you think rate is everything. Every lender you call is throwing percentages at you and you're doing mental math, trying to figure out who's giving you the best deal. But I'm gonna show you today why that's exactly what bad lenders want you to focus on. Because while you're comparing rates down to the 8th decimal point, you're missing the 7 things that actually determine whether or not you'll get the house or not. I'm Benny Rabishin, and I've helped over 1,700 first-time home buyers navigate this process. Today, I'm pulling back the curtain on what most lenders won't tell you, what realtors say behind closed doors, and the exact framework you need to find a lender who will actually help you win. So before we get into the how, let's talk about the why. Because some of you are thinking, it's just a lender, how much does it really matter? Well, it matters more than almost anything else in your home buying process. Here's what most first home buyers don't understand. Your lender is on every document, every phone call, every email in your transaction. The listing agent sees their name. The seller sees their name. And they're all making judgments about your offer based on their experience with that lender. I had a realtor tell me something wild last week. She said she has this list on her phone literally labeled of lenders she refuses to let her clients work with. Not because they're bad people, but because she's watched them kill deals over and over again. She told me about 2 identical offers, same price, same down payment, same everything. One got accepted and one got ignored. The only difference? The lender. The listing agent took one look at the pre-approval letter, saw the other lender's name, and told the seller, take offer B, trust me. Think about that. You could have the perfect offer, the perfect house, the perfect everything, and you don't even get a shot because your lender has a reputation for being slow, unresponsive, or unreliable. Now, your lender isn't just giving you money, they're either opening doors for you or slamming them shut before you even walk up to the house. So yeah, this matters a lot. All right, let's blow up the biggest myth in the mortgage lending. That's the lowest rate automatically means the best deal. I'm not saying rate doesn't matter, it does, but it's like saying the only thing that matters about a car is the miles per gallon. Yeah, that's important, but what about the safety, the reliability, whether it'll get you actually to where you need to go? So here's what happens when you choose based on rate alone. So scenario 1, you find a lender, they're advertising 5.875%. Sounds amazing compared to everyone else that's at 6% or higher. You apply, then you see the fees, origination fees, processing fees, underwriting fees, administration fees, which is just code for we're making up charges. By the time you're done, your closing costs are $10,000 higher than the lender who quoted you 6%. Now do the math on that. On a $500,000 loan, the difference between 5.875% and 6% is about $70 a month. So you're paying $10,000 up front to save $70 a month. That's a 143-month break even. That's almost 12 years before you actually start saving money. And most people refinance or move within 7 years. So you're literally paid more to get a better rate. Actually, I just made a whole video about this. I had a client who was about to use Rocket Mortgage and I saved them $20,000 in fees. $20,000. Same rate, same loan, but the fee structure was wildly different. I linked the video in the description if you want to see exactly what happened and how these companies hide costs. Okay, scenario 2. You lock in with a low rate lender. Everything seems fine until you're in week 3 when they casually mention they're a little backed up and they might need an extension. Week 5, the seller starts to get a little antsy. Week 6, they accept a backup offer because your lender still can't get them clear closing date. You saved $40 a month on your mortgage payment, but you lost the house entirely. Scenario 3. And this one drives me crazy. You close with a low rate lender. Everything seems fine. 6 months later, the rates drop. You call to ask about refinancing. They don't call you back. You call again. They're looking into it. Meanwhile, you're watching rates climb back up, missing your window because the lender who is so eager to get your business is now nowhere to be found now that the deal is closed. Listen, here's the truth. Lenders who advertise the absolute lowest rates are usually doing one of three things: burying your fees into the loan, cutting corners on service, or straight up understaffed and overwhelmed. The best lenders are competitive on rate. They're not always the lowest, but they're close enough that the difference is negligible compared to everything else they bring to the table. So if rate isn't the only thing, what should you actually be evaluating? I'm going to give you the 7-factor framework. This is what I walk through every first-time home buyer. So what separates lenders who help you succeed from lenders who will waste your time? Factor 1, proof of performance. Now, don't ask a lender how fast they are, ask them to prove it. What's your average close time on the last 20 transactions? Now, good lenders will tell you and show you. Bad lenders will say, well, every deal is different, which is code for we're slow and we don't want to admit it. Now, if they promise 21 days, ask for documentation. If they can't back it up, it's your first red flag. Factor 2, pre-underwriting. This is huge, and most buyers don't even know to ask about it. A pre-qualification, quite frankly, is garbage. It's basically the lender saying, yeah, you could possibly get a loan. It means nothing to a seller. Now, a pre-approval is better. It means they've verified your documents. But pre-underwriting, that's when they actually submit your file to an underwriter before you make an offer. This means you know about any issues before you're under contract, and the sellers know your approval is rock solid. So ask your lender, do you pre-underwrite files before making offers? If they say no, ask why not. Because the lenders who do this are the ones who close on time every time. Factor 3, communication speed. Okay, here's a test. Call or email your lender at 10 a.m. on a Tuesday. Time how long it will take them to respond. If it's more than 4 hours, I would move on. I'm serious. During your home search, speed matters. You see a house Saturday, you want to make an offer on Sunday, you need documents Monday morning. If your lender takes 2 days to respond to a simple request, what do you think happens when you're on a deadline? The best lenders respond in under an hour. Many respond in under 15 minutes. That's the standard you should expect. Factor 4 is fee transparency. Okay, this is where a lot of buyers get burned, so pay attention. You need to ask your lender for a detailed breakdown of what fees you can expect. Now, here's the thing. Fees are based on the criteria of your specific loan, so you may need to provide them some clarity on your situation or even share some financial details for them to give you an accurate quote. But it's worth it to get the real estate numbers up front. Ask them, based on my situation, can you provide a detailed breakdown of all fees that I should expect? Now, good lenders will walk you through every single line item: origination fees, underwriting fees, processing fees, and title fees, everything. And they'll explain what each one is for and why it costs what it costs. Now, bad lenders will be vague. Oh, we'll figure that out later, or it depends on a lot of factors. No, they can give you a realistic estimate if they actually want to be transparent. Now, the key here is getting detailed numbers early on so you can actually compare lenders accurately. Don't let anyone tell you that they can't estimate fees until you're halfway through the process. If they won't give you real numbers up front, that's a massive red flag. Factor 5, market knowledge. Here's something critical. Does your lender understand your market? Now, they don't necessarily have to be physically located in your city, but they absolutely need to have a deep understanding of how your market works, and most lenders don't. For example, I'm based in Bend, Oregon, but I work with clients all over the West Coast. I know how property taxes work in California versus Oregon versus Washington. I understand the different appraisal timelines, the inspection norms, what sellers prioritize in different markets, how HOA regulations differ, all of it. But here's the reality. Most lenders don't have that depth of knowledge outside their immediate area. They might be great in their local market, but to put them in a different market or state and they start to guess. So you need to ask, how well do you know my specific market? How many loans have you closed in your city in the last 90 days? What are the unique considerations for buying here? Listen to their answer. If they're local and active, great. If they're not local, but they can speak specifically about property taxes, typical closing timelines, local lending regulations, and market dynamics in your area, that works too. But if they're vague or they're clearly not familiar with how things work, you're buying, move on, because they're going to learn on your dime. And that's going to cost you time, money, or even the house itself. Factor 6, long-term partnership versus transaction. Here's where you'll see the big difference between average lenders and truly exceptional ones. Now, most lenders, and I'm talking 99% of them, view you as a transaction. They help you get the loan, they collect your commission at closing, and you never hear from them again. Maybe they send you a holiday card, that's it. But the best lenders, they view you as a 30-year relationship. Because here's the truth, your mortgage journey doesn't end at closing. It's just the beginning. Think about it. Over the next 30 years, rates will change. Your income will change. Your family will grow. Your financial goals will evolve. And if your lender disappears after closing, you're navigating all of that alone. So here's what you want to look for. A lender who positions themselves as your long-term financial advisor for homeownership. Ask them, what does your relationship look like with clients after you close? Here's what the best answer sounds like. They do annual financial reviews with you. Not just when you call asking about refinancing, but proactively. They're looking at your loan, your equity position, current rates, and your overall financial picture to identify opportunities. They're constantly looking for ways to improve your situation. Can you eliminate PMI early? Should you refinance? Is there a better loan product now that you've built more equity? They're thinking about this for you. They connect you with other financial resources that help you build wealth. They have relationship with strategic CPAs who understand real estate, financial advisors who can help you leverage your home equity properly, estate planners who can incorporate your real estate into your long-term plan. This is about being the most successful homeowner possible and building the most wealth from your real estate investment. So when you're interviewing lenders, listen for this. If they say, oh yeah, you can always just call me if you need anything, that's not a plan. That's them hoping you forget about them after closing. But if they talk about systems, regular check-ins, proactive monitoring, and connecting you with a network of professionals, now that's someone who understands that homeownership is a 30-year journey and they're in it with you for the long haul. That's the kind of lender you want in your corner. Factor 7 is problem solving. Things can go wrong in transactions. Appraisals come in low, inspections reveal issues, documentation gets delayed. Now, you don't want a lender who just panics when problems arise. You want someone who's seen every scenario and knows how to navigate it. Ask, tell me about a time, about a deal that almost fell apart and how you saved it. Now, good lenders will have stories. They'll tell you exactly what happened and what they did. Bad lenders will either not have an answer or will blame the client, the appraiser, the agent, anyone else but themselves. Now, let me give you the rapid fire questions you can ask immediately that will separate the good from the bad. Now, you can literally ask these on your first call. Okay, question 1, what's your average close time and can you show me data from your last 20 transactions? What you want to hear, a specific number with proof. 18 to 23 days, here's our report. Red flag, vague answers, defensiveness, or every deal is different. Question 2, do you pre-underwrite before we make offers? What you want to hear, yes, we submit to underwriting before you go into contract. Red flag, we can do that if you want, which means they don't usually, or that's not necessary. Question 3, if I email you at 10 a.m. on Tuesday, when will you respond? What you want to hear, within an hour or usually within 30 minutes. Red flag, same day or within 24 hours or anything vague. Question 4, how do you make my offer more competitive beyond just the rate? Now, what you want to hear, talk about their reputation, their speed, their relationships with local agents, their certainty of closing. Red flag, confused about the question or only talks about rate. Question 5, what's your plan for staying in touch after we close? What you want to hear, specific systems. I check rates monthly for all my clients, or I send quarterly market updates. Red flag, well, you can always just call me with no proactive plan. Question 6, can I speak to 2 of your past clients from the last 90 days? Now, what you want to hear? Absolutely. Let me connect you. Red flag, hesitation, excuses, or I'll have to check if anyone is available. I promise you, if you ask these 6 questions, you will immediately know if you're talking to someone who will help you or hurt you. Let me paint you a picture of what working with the right lender should feel like. From day one, they're educating you, explaining your options clearly. They're not just pushing you towards the loan that makes them the most money, they're guiding you toward what makes the most sense for your situation. They respond fast, not same day fast, hour fast, because they respect that your time matters and opportunities don't wait. They're proactive. You're not just chasing them for updates. They're reaching out to you before you even need to ask. Hey, we need this document. Here's exactly how to get it. And here's why we need it. They make you feel confident when you submit an offer. You're not just wondering about what the financing will hold you up. You know it will because they've done the work up front. They have relationships. Your realtor knows them and trusts them. Listing agents see their name on the pre-approval letter and think, okay, this is solid. And after you close, they don't vanish. They're checking in. They're keeping you informed. They're treating you like a long-term relationship, not a transaction. That's the standard. And if you're getting anything less, you're working with the wrong lender. Look, buying your first home is one of the biggest financial decisions you ever make. You're going to spend months searching for the right house, the right neighborhood, the right everything. Don't spend 10 minutes choosing the lender just because they quoted you 0.1% lower than someone else. Use this framework, ask these questions, and find someone who's going to be your partner through this process and beyond. Because here's what I want for you. I want you to walk into a showing, fall in love with the house, make an offer, have the seller accepted immediately because your financing is that strong. I want you to close on time, move in on schedule, and never ever wonder if your lender is going to drop the ball. That's what working with the right lender feels like, and that's what you deserve. If you found this helpful, do me a favor, save this video, share it with anyone you know who's thinking about buying, and drop a comment letting me know what's your biggest question about the mortgage process. I read every single one and I'll make more content around what you need. Thanks for watching, and I'll see you on the next one.